If you felt like everything is happening at once, you're not wrong. Here's a recap on the news this week. Banks are tokenizing money. Governments are quietly stockpiling Bitcoin. Stablecoins are moving more value than Visa. AI robots are getting factory jobs. Bad news for interns. And XRP refuses to disappear no matter how many times critics hold a funeral. This isn't chaos. It's a global financial system being rewired in real time. Let's organize the noise and extract what actually matters. The Quiet Takeover. Banks are tokenizing everything. For years, crypto critics said banks will never touch this stuff. Meanwhile, in reality, JP Morgan tokenized cash on Ethereum. BNY Mellon launched tokenized deposits. Goldman Sachs says regulation will drive the next wave of institutional crypto. Barclays invested in stablecoin settlement infrastructure. World Liberty Financial applied for a national trust bank charter to issue stablecoins. Wyoming issued the first state-backed stablecoin on Solana. Community banks are panicking about yield-bearing stablecoin loopholes. Translation: banks aren't fighting crypto anymore. They're copying it, then slapping compliance on top. Investor takeaway: infrastructure always wins first. Bet on rails, not hype. Can't say this enough. Stablecoins, the real winners nobody talks about. While retail argues, stablecoin transactions hit $33 trillion in 2025. Russia and Iran are using stablecoins to bypass sanctions. Tether is expanding QR payments. Rain stablecoin firm hit a $1.95 billion valuation. PayPal and Paychex are integrating alternative direct deposits. Penny shortages force the Fed to restart coin deposits. Yes, really. Stablecoins aren't crypto speculation. They're shadow banking with Wi-Fi. Investor takeaway: stablecoins are becoming digital dollars for a fractured world. Ignore them at your own risk. XRP, the asset that refuses to die and might replace SWIFT. Love it or hate it, XRP headlines won't stop. XRP re-entered the top 4 cryptos. Ripple won UK FCA regulatory approval. Japan's finance minister supports XRP in the financial system. SBI's CEO openly discusses Ripple and 2026's Fire Horse year. Chris Larson says SWIFT is being replaced. Ripple named a strategic advisor at a $1 billion XRP treasury company. XRP up 18% in the first week of 2026. Amazon Web Services lists Ripple as a verified partner. Institutions allegedly preset XRP price levels. ETF inflows paused after a 36-day streak. Normal, not doom. Is XRP volatile? Yes. Is it deeply embedded in institutional plumbing? Also yes. Investor takeaway: speculation fades, utility sticks. Bitcoin, from risk asset to strategic reserve. Bitcoin's role is changing, quietly but permanently. Florida proposes a strategic Bitcoin reserve. Vanguard holds $3.2 billion of MicroStrategy. Citi reiterates a $143,000 BTC base case. Bitcoin holds near $90,000 despite shrinking volume. Riot Platforms sold $200 million in BTC. Miners take profits. Geopolitics: Venezuela oil exports, military operations, move BTC. $2.2 billion BTC and ETH options expired amid low open interest. Bitcoin is no longer a rebel. It's becoming digital sovereign insurance. Investor takeaway: when governments buy something quietly, retail usually notices late. Pay attention to the top players. Ethereum and Solana, the infrastructure wars. Heat up, ETH staking queues cleared, changing supply dynamics. Grayscale distributes staking rewards to ETH ETF holders. Solana Mobile launches SKR Token Plus airdrop. UpXE builds a Solana treasury with 2.2 million Solana. Capital rotates from BTC into Solana, SUI, and early cycle alts. A16Z says crypto's next phase isn't new chains, it's applications. This isn't Ethereum versus Solana. It's who becomes the back end of global finance. Investor takeaway: follow developer traction. Plus, capital flows, not Twitter wars. AI, robots, and the power problem nobody is pricing in. While finance transforms, AI is eating the physical world. Boston Dynamics, humanoids learning factory work. Hyundai debuts Atlas robot. Humanoid robots dominate CES. Robots can pour coffee, painfully slowly. NVIDIA launches AV AI models. NVIDIA accelerates Siemens chip design. Data centers told to bring their own power or shut down. Hobart City Council, Indiana, approves Amazon data center. AI can now design viruses from scratch. Yes, that's alarming. AI isn't just software, it's energy, hardware, copper, power grids, and geopolitical leverage. Investor takeaway: AI winners won't just be models, they'll be energy, chips, and infrastructure. Macro reality check. Debt, rates, and system stress. Janet Yellen warns $38 trillion debt hits a red line. Bank of Israel cuts rates again. Fed signals longer rate cut pause. Bankruptcies surged in 2025. Trump proposes capping credit card interest rates at 10%. I'll believe it when I see it. Trump wants to block Wall Street from buying homes. Hello, 50-year mortgage, which is absurd. Chinese copper demand collapses. Silver breaks $80. Gold structure remains bullish. This is what late cycle looks like. Debt pressure, plus policy experimentation, plus asset rotation. Investor takeaway, hard assets, plus decentralized rails thrive when trust erodes. Final thought. Bull market, not quite. It's a system upgrade. I'll say it again. This is the most opportunistic time to invest and position yourself to succeed in this new economy. What we're witnessing isn't just price action, it's governments hedging sovereignty, banks rebuilding rails, AI reshaping labor, crypto absorbing global friction. Own some assets, diversify with crypto, AI, and energy stocks. The Fed is printing and pumping money into the financial market this year, so take advantage now. Acquire skills to understand this new financial system. Money equals control and freedom. The winners won't be the loudest narratives. They'll be the quiet infrastructure plays powering everything underneath. And by the time everyone agrees and filters in, the smart money already rotated. Peace.